In today's investing environment, it's vital that individual investors and small pensions and endowments do everything they can to gain a firm grasp on information that can affect their investment success. That's why NS Capital would like to share what we believe are the 3 core principles for successful investing. First, identify the 2 sides of asset management. Next, understand the 2 dominant factors that impact investment performance. And the third principle is to demand full transparency. We'll start with principle number 1. Identify the 2 sides of asset management. On the one side, there is the profession of asset management, where success is measured by client outcomes. And on the other side, there is the business of asset management, where success is measured by how well the company and the stockholders do. For the profession of asset management, the goal is the intelligent management of an investment portfolio for superior long-term returns. For the business of asset management, the goal is to gather as many assets as possible to generate fees, which create profits for the investment firm and its stockholders. Nowhere is the business of asset management more evident than in the mutual fund industry, which is dominated by 50 companies that control somewhere around 90% of all the assets. More importantly, most of these companies are publicly owned, showing a greater loyalty to their stockholders as opposed to the clients who invest in their funds. To illustrate this point, here is one of any number of examples that show the stockholders doing much better than the clients, in these cases by a factor of almost 4 to 1. Principle number 2 is to understand the 2 dominant factors that impact investment performance. One is the skill of the asset manager, and the other is the costs you pay for having your assets managed. In regards to the skill of an active manager, their selection should reflect unique insights and abilities that can produce superior returns over time. But it's important to remember that superior returns do not come in a straight line. Even the most skilled managers will have periods of underperformance, and that's to be expected. Costs and fees are another story, because the single best way to improve your investment performance year in and year out is to ensure that you're receiving value for the fees you're paying. Here's an example of how fees directly impact performance. Let's take $100,000 and assume an annual return of 8%. Over 20 years, this would grow to $432,000. A 2% fee reduces that return to 6%, which only grows to $303,000. And that's why eliminating any unnecessary fees, by that I mean fees that do not add value, creates a straight line improvement in investment performance in both bull and bear markets. Principle number 3 is the need for full transparency, which we hear about all the time in financial services, government, everywhere. When it comes to investing, transparency provides the information needed to make good investment decisions. As an investor, here are 4 questions you should have the answers to. What are the fees? We mean all fees, being paid to the advisor, the asset manager, and the distributor, which is most likely a bank or a brokerage firm. What is the standard of care? Are your investment recommendations being held to a suitability standard which protects the distributor, or to a fiduciary standard which legally puts the interest of the client first? What are the conflicts of interest? What you're looking for here are any quote-unquote arrangements between the advisor, asset manager, and distributor. Specifically, you're looking for any pay-to-play, which undermines objectivity as well as the quality of the advice. And finally, is there an alignment of interest? Put simply, are the people managing your money investing along side by side with you? Knowing the answers to these questions will show you whether the people you are working with are truly representing you, the client, or if they are representing the industry. Let's sum up these core principles. Identify the 2 sides of asset management. You want to work with firms that are in the profession of asset management, not the business. Understand the 2 dominant factors that impact performance. You want skilled managers with unique insights and abilities, and you want to eliminate any unnecessary fees that don't add value. And lastly, demand full transparency. Get answers to questions that level the playing field between you and the industry. Knowledge is power, and you can use these 4 questions we've provided as a guide to becoming a better investor. For more information on these issues and NS Capital, please visit our website at www.nscapllc.com.